Hey, what's up? Welcome back to another awesome episode of Life in a Show podcast. I'm your host, Jason Wojo. On the podcast, we also have my co-host, Polish Peter. What's up, bro?
Hey, man. So I'm excited about this particular episode because we're going to talk about one of my favorite things that I like to drink. I want to spill the beans,
Milk.
Right? You don't want to spill the beans. We don't want to spill the beans.
Yeah, and there's a pun in there, by the way. There's a little hint in that phrase, "spill the beans." Listen, we're going to talk with Adam Jason, and Adam is a really interesting guy. He's going to share the story when we start off the podcast. But he's a former attorney, raised all kinds of money for large institutional investments, and he's kind of made a departure from that, and he's gotten into, and now he kind of works with this company. It's called the Green Coffee Company in Colombia. South America, and we talk about investing. We talk about getting involved financially when you're funding a business, when you're doing due diligence, what kinds of things to look for, what kinds of questions to ask, like, you know, how do you, and if you're looking for money, like, how do you kind of like position yourself in a way that maybe can attract money? So we talk about that conversation from both sides. If you have the money and you're looking to invest it, and also if you don't have the money and you're looking to attract it.
Right. So check it out. Grab your pen and paper and just think about, from your perspective, where you're at. If you're looking to raise some money, how can I use this information to my benefit?
Yeah. And you might not, of course, you may not be, trying to start a coffee company, but like look for the meta lessons, look for the things that you can take from this episode and apply to your own business. All right, let's jump right now. Here's our interview with Adam Jason. Hey, dude, welcome to Life in Our Show.
Thank you so much. Nice to be here.
Man, we talked quite a while ago, and I thought it was a very, very interesting introduction because you have what I would consider a very unique career change, going from an attorney to now being involved in this incredible company. But I don't want to give away I don't want to spill the beans yet. I want you to tell people about it. And dude, I'm curious, like, what is it that spawned this kind of, I wouldn't even call it an evolution. I'd call it a completely, right-hand turn from a departure from what you were doing before.
Right. Yeah. I mean, just by way of background. So talking to you guys today from Medellin, Colombia, down in South America. I've been here since January of 2018. And like you said, yeah, I mean, definitely a different place than Buffalo, New York, where I grew up, and corporate America, where I kind of started out in. So I started as an attorney in the US, working for two of the largest law firms there, working on IPOs, corporate financing transactions, really for Fortune 500s and Wall Street investment banks. And I did that for about 8 years. And you get to the point, for anybody who's familiar with that world, you basically have three choices at that kind of point in your career. It's, do you stay at the law firm and become a partner there? Do you go in-house and work at a client, like as a general counsel or in their legal department? Or do you do something completely different, which I guess opens up a whole nother box of options, but really something entrepreneurial? I went towards the latter. I was just at a point in my career where I wanted to do something different, kind of explore what was out there, and at the same time knowing that the ability to go into corporate America or get a job at a law firm and have that, as call it, a safety net, would always be out there for me. So basically where I was at that point in time, I was in Dallas. I had gotten a job offer for another firm down in Houston and had a month in between and decided to do some traveling. I have a very traditional background, didn't do a lot of traveling really growing up. Our trips were basically to go across the border into Fort Erie in Canada or up to the Adirondacks. Wasn't too eccentric growing up in terms of international travel, anything like that. And I had never really done the study abroad program, or just hadn't seen the world too much. Heard some good things about Colombia, what was going down here, both from just this is a fun place to check out and see, but also investment opportunities. Real estate market was really picking up. Tourism really taking off. So it's kind of a boom in the short-term rental market. So just wanted to see it for myself, have some fun, and pick a place that I could go live, for a month and just see what that was like. So I came down here, and I guess, there's some serendipity to it, or fate, whatever you want to call it, but got in touch with some folks who were doing some really interesting things in the business world. Met my now business partner at Legacy Group, which is our investment firm, and then the Green Coffee Company, which is the business that you alluded to before. Excuse me. And that business was really taking off at that point, and we were looking to do the initial capital raise for the business back in 2017, 2018. And it's just kind of an open an opportunity that I was looking for to do something more entrepreneurial. Came back from vacation, did about 10 months at the law firm in Houston, and was helping during my free time with the initial capital raise for the Green Coffee Company. We're raising about $6 million. Our focus really at the time, and still today, was with high net worth investors in the US. And when you're raising money from that group, even though a lot of the business operations were taking place in Colombia, all the same rules, laws, et cetera, apply for raising capital because the investors are based in the US. So I could lend kind of a helping hand from that point, saw the potential for the business, saw the potential on the life side of things, the lifestyle equation, and just decided to kind of make that leap back in 2018 to come down here full time. And like I told you guys before we started the call, now I have a new baby girl, a wife, a life down here. So it's been a fun last couple of years.
Dude, wow. So so many thoughts on this. So by the way, did you ever raise capital before as an attorney, or have you had any experience in this prior?
Yeah, I mean, our clients were, I was in the capital markets group at the law firm. So what we would do is, take companies public, or if companies were looking to issue new debt, we would do that. If they were issuing new equity, I probably did $10 billion worth of financing transactions in my career at the law firm, from clients like Sherwin-Williams. We did the IPO for Yeti Coolers, for people who know that name. So really kind of a broad spectrum, but in that Fortune 500, let's raise 300 million, let's raise 500 million, let's raise $1 billion, mostly through the public market. So companies listing on the New York Stock Exchange, the NASDAQ, and then private debt financings that they would use for M&A transactions, refinancings, a whole host of different corporate strategies. But yeah, that's, from a strategy and a legal background, that's the world I come from.
Got it. So why? So you obviously had some significant amount of experience, although you said it was in like a little bit of a different format. Why did you guys decide to use the high net worth individual route versus continuing what you had done previously?
The business we started here, Green Coffee Company, I'd say was really investor driven. So as I mentioned, at the time that I came, a lot of the I'd say like the foreign direct investment, meaning the money coming from outside of Colombia, foreigners interested in investing into Colombia, was going into commercial real estate, short-term rentals, residential properties here. But we saw a demand from investors that we were doing some work with on commercial real estate projects for an asset class that functions similar to real estate, in the sense that there's a lot of collateral there. There's the potential for cash flow. There's an inflation protection when you're talking about commodities and coffee and whatnot, but also a little bit more of an elevated potential for higher returns, since you're, not trapped within the real estate cycle, which, becomes hard to get 2, 3, 4 times your money, versus if you're building business enterprises, the potential is a little bit higher. So we looked at the market and we said, okay, what's a commodity that people, primarily US-based investors, can wrap their heads around, right? We grew up with Colombia's premier coffee, 100% Colombian, Juan Valdez advertisements growing up. So the US consumer, the US investor, they could wrap their heads around, okay, Colombian coffee, that's an investment that's interesting to me. And it's not too far from commercial real estate. You guys are going to buy a bunch of land. You're going to plant trees. You're going to consolidate infrastructure. You're going to try to push the business to be cash flow positive. I can understand my downside risk in this situation. So it was really driven by that investor demand. And then we dug into the market, and we've kind of, I'd say, struck upon additional potential that we didn't even know was there at the start. But I think your question really is, why use individual investors instead of large institutions, et cetera? One, that's what we had available to us at the time. And two, when you're doing businesses in foreign markets, especially one, you got to get to a certain scale to talk with institutions. If you're only going to raise $7 million, it's just not interesting enough to get people really out of bed for that amount. But that was what we need to prove concept, right? We didn't try to set out to raise $100 million on day one, because we wanted to test the theory and make sure that this was something that was viable and scalable. So that pushes. Yep.
I was gonna say, so now, okay, so that makes a lot of sense, because it would seem to me, and I hear this from, for instance, whether we're talking stocks or any other investment, where you kind of got to reach a threshold size before you're going to attract like larger people that have a ton of money they need to move, and these little nickel and dime deals is just not worth their effort. Like, is that pretty fair?
That's right. I mean, if you're going to talk to institutions or you're getting into family office money, I mean, the cutoff we've basically seen is more like 25 million, and even that's going to be pretty small in some cases. So
those are the nickels and dimes, Wojo.
Yeah, like
those are those nickels and dimes under 25
I'm not waking
million.
up for 25 million, bro. Come on, seriously?
Yeah. That's right.
Right. Okay, cool. And so interesting. So now when you did this for as an attorney for the firm, were you actually the one to go out and have those conversations with people, or were you kind of just handling the paperwork on the back end, making sure you're in compliance, getting all the things, ducks in a row? Like, what was your responsibility there?
It was more of the legal side, paperwork, etc. But, we were in the rooms when, for example, companies are telling the stories to investment bankers who are then going to go and sell the company. We've sat in on roadshow presentations. We've sat in on earnings calls with management and guided them through those. But I've definitely had to take on more of call it a salesman type approach to selling the business, telling the entrepreneurial story than I did when I was at the law firm, and it was a little bit more behind the scenes. But you do get a sense of what information is important to investors, what is traditionally seen in the market. So, when you start talking to those institutions, you don't show up with even just like as simple as what is a presentation, what's the right way to put together a pitch deck, what's the information that they're going to want to see, what are the questions to anticipate. I know that training is valuable as well, but I've definitely had to think more through the sales/entrepreneurial storytelling of the business side of things.
Well, yeah. So I love that. And so I'm curious, man, because we have a lot of investors, business owners that track with Life and Air. And I'm curious, like, what are some of the things you've learned about raising money that our audience might be able to benefit from? And I know that it could be very different potentially from the way, your company's doing it, and for instance, a real estate investor or an apartment syndication or a business looking to get off the ground. But like, do you have any tips for people or some things you've learned that you could share?
Yeah, I could probably give you a bunch, but maybe I'll just start with a couple and we can go from there. I'd say the first thing is really finding your audience. What product are you looking to sell? So for example, if you have a tech startup that you're wanting to raise money for, that might very well be better for venture capital, people who are in that space, right? Where we really took off was with the real estate investors, because of that similarity between hard land, infrastructure, commodities, inflation protection, and the reason that a lot of people turn to real estate from the get-go, right? They like to have assets they can touch and feel, those kind of things. So, understanding what the right audience is. We talked about the check sizes, right? There's no sense in going and asking, Morgan Stanley for a check for $7 million when they're not even it's not even worth their time to take the call. So, building with the right audience there. I think, telling a story that's compelling is super important. People want to see a path to growth and a path to returns. So you have to really, I'd say, hone in the message, understand why you're different, try to offer something new to the market. The benefit we have of being in Colombia is nobody else is here in Colombia. So we get to tell a story that's very unique versus, if you're competing for eyeballs with 15, 20 other real estate syndicators, it's hard to differentiate, why should somebody go with your syndication or not, especially if you're just getting off the ground and, you're trying to sell the future versus a track record. That's a harder, that's a harder story to tell. And then I think it's, once you get those investors in and you get the ball rolling, it's honesty, transparency, communication that builds referrals, and really finding the right groups. We've done a lot with the high net worth investor group, but it's taken a lot of work, through podcasts, investor groups, presentations, trying to build referrals. The list goes on and on of kind of the different channels we've tapped into. But once we found our audience, we've been pretty successful in resonating with that audience as well. But it becomes what's your credibility? What track record do you have, if any? What's your ability to tell the story simply? How much do you believe in your own vision? Because you need, you can't convince others to if you don't yourself. And then it's that follow-up, right? Telling people what's going on, the good, the bad, making sure they understand what the vision for the business is, and trying to keep people excited. Don't rest on the laurels of, okay, I got the money in, now you're not gonna hear from me. It's now, how do we become like really kind of long-term partners with our investors and think about what's going to get them excited and, kind of involve them a little bit in the excitement that surrounds the business. So some of those are a little vague. Hopefully some are concrete. We can go into as much detail as you'd like.
Well, I'm curious, so how does somebody, and would you even recommend, I'll give you an example. So we see people that are like brand new real estate investors, or they're, I'd still call them fledglings. They've maybe done a few deals. So they don't have a huge track record. So how does someone like that attract money if they don't have the track record yet? Would you recommend they don't take money, or do they do something else? Or how do they, because again, I'm very much against people misrepresenting themselves as being experts if they're not. Do you have any advice for somebody in that boat?
I don't think you would be like, oh, don't take money. If you have I'd say be honest with the risk that comes with it. Like there's a famous story of in the Jeff Bezos biography of taking money from his parents and telling them, look, like there's a 70% chance that you're going to lose your money. And, I'm probably understating the case. Right. So you're probably not going to be able to go again and knock on the door at Morgan Stanley. But, maybe there's friends, family, people you've built credibility with over the years, and you start with something small and build kind of credibility. I think it goes that way. And then the message kind of resonates, but it's telling people what the risks are. This might not work out. This is a gamble. Having skin in the game obviously is super important. If you're going to do it, I don't think it's kind of fair to take money unless you're also willing to put something on the line there. And if you're not at the point where you can do that, I think it's worth spending time around people who are being successful in something that you'd like to ultimately do on your own. If it's, for example, I want to syndicate my own real estate projects, I'd say you should have had experience working with somebody else who's already doing that. So you learn kind of the tricks of the trade, right? So I think you got to look yourself in the mirror and say, of course, push, to do something special and unique and big, but also, so with some people, you only get one shot if you lose their money. So you want to do it, You want to do it right.
Well, because I've heard, man, and can you clarify this for the audience? Like, is there a difference between a fund and a syndication?
Yeah, I mean, the fund would usually be, okay, we're going to raise a fund and we're going to invest in this kind of asset class. When I think of syndication, not based on any kind of like legal separation of terms, it would be more, okay, we got this one asset that we're going to look to invest in, but functionally it's the same, right? You're going to pool your capital and invest in an asset together.
Okay. Well, and because, I've seen some of these deals, for instance, syndications recently that, and it could be the market, whatever, but, and this is going to kind of, I'm setting up my next question is like, so there's been a bunch of syndications I've seen, And some of these have come back and either extended the terms, because the original term was like, hey, we're gonna all pool our money, we're gonna buy this thing, we're gonna refi it out with the bank, but interest rates or whatever just did not working as conducive as people would like, and so people are getting stuck in there longer. Or in some cases, they've had capital calls, and investors are like, "I never signed up for this." And I'm like, "Well, you kind of actually did, but you maybe didn't really understand the terms." Like, and so how does somebody like who's potentially investing in this? How do you give them a sense of security, or is it truly just disclosing like, "Hey, this could happen," like you said earlier, and is there any protection for somebody that is in a situation like this?
I think it's important to exercise some discretion too around who you take money from. People should the ideal investor for us is somebody who is in business, understands that things are cyclical, understand that the unexpected comes up. If the possibility of interest rate changes is so shocking to somebody, then it's probably not somebody you want to have as like a cornerstone and investor in your business, because you need it's a two-way street, right? Like, okay, I'm taking your money and I have a fiduciary duty towards you, but also you got to give me some room to breathe and let this business grow. Those are the ideal kind of investors. Maybe some people don't have the benefit of having that selection, but I think it comes down to communication, right? It's trying to eliminate surprises. If you're in a situation where the interest rates are moving against you and it disrupts the plan, it's getting the investors together and communicating that, understanding what the implications are, and just sharing the message. I mean, that's the history of the world of growing businesses. And, some companies have good quarters, some companies have bad quarters. It's just telling the story so that people can understand the general business dynamics. Same thing, transparency and communication. Nothing ever goes 100% according to plan. I think most people can wrap their heads around that.
Yeah.
Yeah, I love that conversation, because one of the things that I'm hearing from you is obviously communication is huge, but there's got to be some kind of a relationship as well. I think, sometimes maybe it's brand new relationship, but I think, a lot of the times when we talk about on this podcast and we talk about in Life on Air, how important do you think it is to have that relationship prior to asking for money?
We've had a kind of an interesting experience in the sense that a lot of the capital that has come into our business has been through family, friends, folks that we've had professional relationships with for a long time. But also, you do get a lot of, like, we have 500 investors and $90 million of capital that have come into the business to date. A lot of those people I don't know personally. They follow along, they hear good things from other people. They invest alongside people that they trust who've already made the decision to invest in us. So I don't think it's a critical thing that somebody intimately, but you do have to.
There's got to be that trust and rapport, right? I mean, there's got to be that in there.
It has to come from somewhere, right? Maybe they hear your story and they believe in you enough through a podcast, and 50,000, 100,000, 250,000. It sounds like a lot of money to a lot of people, but for a lot of people, it's not much at all. So they'll make some bets and see if things are interesting and kind of test you, right? There's other people who are more diligent and they want to understand you better and have a series of phone calls. There's that. And then there's other people that, you've built relationships with over the course of a lifetime, not necessarily in, hopes of raising money from them eventually, but, people that have seen the kind of person you are for an extended period of time and have come to trust you. And then it all kind of snowballs, right? That person who I just mentioned, for example, tells people who they have that same relationship with, and you're presenting an interesting opportunity, people like to latch on. But it's a variety of things. I don't think there's any one crucial portion of it.
Okay. I got a follow-up question because as you're talking about raising money, especially when you're starting a brand new company, I mean, this was for you, the green coffee, it's completely different, right? Completely new. So I imagine you probably talked to a lot of people, right? What would you say? How many people did you talk to so far in this whole entire venture?
Early on, it was challenging because you don't have much to show other than a business plan. And, especially when we're talking about Colombia, people are, and I'd say it doesn't necessarily Colombia, maybe Colombia is an example, but, you talk about overseas investing, these kind of things, investing in new jurisdictions, investing in South America. There's a lot of skepticism of just like, is this real? Is
Mhm.
somebody just taking my money? Are these farms, do they actually exist? I'd say there's way more due diligence that goes on from the early investors versus the people who say, for example, XYZ investor has had their money with us for 3 years. They've watched us build the business. They get the newsletters. They've seen the farms. Those ones, they tell a friend and other people join in the offerings with them. That's a different story. But yeah, early on, it's a challenge just to convince people that things are actually real. Now when we
Right.
talk to investors, by the point they're actually having a conversation with us, I'd say probably 80 to 90% are interested and commit capital. In the early days, it's a much lower
Yeah.
hit rate. There's a lot more skepticism
Right.
naturally.
Oh yeah, I think totally understand that. So think about it this way: if someone is in their shoes right now, kind of they're starting something new, right? Like you, in your case, was a coffee out in yeah, Colombia, right? I mean, um, what would you say to them? How do you overcome that fear within yourself or whatever it might be to go and have those conversations, to go and create the story or whatever they need to do?
Ultimately, it's a numbers game and getting enough people who believe in what you're doing by you first believing what you're building, yourself, and then it's getting that critical mass where there's kind of a tipping point. But you gotta do the work until it's there. So getting in front of as many people as possible, probably investing some money in terms of how do I get in front of these right audiences. It's not for most people, it's not going to be, oh, I have a rich uncle or I know these people at this family office or whatever. They're going to have to build it piece by piece. Or, you're in the Silicon Valley of the world, and there's a lot of firms out there that take a risk on this asset class. Again, knowing your audience. But when we're talking about assets in Colombia or real estate projects in whatever emerging market, you have to be a little bit more creative. There's not a whole ecosystem built around investing in this type of asset class, but it's a nice niche to have and a different story to tell. But you ultimately got to
Yeah.
start with what do I believe in myself, and convince those early people to join you.
Got it, man. So talk to me about that. Like, give me some of the things that somebody who would consider, and I'm not even saying your company, I'm saying like any company, what would somebody ask? Like, what would be a good level of due diligence? Like, what if Adam Jason were investing in another business? What are the questions you would ask? Give me the hard ones, man, that people that most people miss. Like, give me some of the hard ones that you think are really valuable to kind of like make sure you're doing your good job of due diligence.
I think, if it's depending on the stage of the business. So if this is like, okay, I'm investing based on a business plan, you're kind of investing in the person and the vision, and does it logically make sense to you? And I'm sure there'd be different questions based on different jurisdictions. So if we're talking about Colombia, people always want to understand political risk, right? If you're investing in something in Canada, maybe it's not as much of a concern for you. It depends on kind of, don't go into anything blind, like have a sense of what you're looking to do, right? If you're investing in a company a little bit further down the road, I would want to talk to other investors who are invested in that business. I'd want to see the track record related to the business. I'd want to see the financials. I'd want to hear the presentation and see if it syncs with the information that you're seeing. Ideally, a company that's a couple of years in, they're getting financial statements audited, and there's something to really look at. So it's, can you get yourself to a level of comfort where, one, you can understand the business, but two, you can make a reasonable determination about things are where they're likely to go. What have I seen in the past? And again, adding in the factor of the people behind the business, right? Like, what can I learn about these people? Who are they? Ultimately, all these businesses are just run by people, so you have to have a belief in who those folks are. It can be tough. I mean, sometimes it's, you do your best, right? Somebody who I know has been invested with them for a while. We're talking about private investments, right? If we're looking at stocks or whatever, it's kind of a different situation. But in this, it's alternative investment. Which syndication do I go with? It's understanding the people, the track record, if there is one there. What information you have to work off and make an educated decision, but get as much as you can without paralyzing yourself.
Well, that's what I mean, man. Because so I'm thinking of some people, are super analytical and they're logical and they want to look at every single detail. Which, if you're looking for money, I guess, you got to decide for yourself. Is this level of scrutiny worth it, or is it okay? Are you so? For instance, I know a guy who invested with another gentleman who it went south, went terribly south, and come to find out, he found out later this guy was under investigation for fraud already. When he went into business with him, I'm like, oh my gosh, how would you detect that? I've never heard of somebody asking to run hey, can I run a background check on everyone involved in business? So how do you avoid something like that?
Yeah, I'd say it's hard. It's, one, I guess there's the question too of how much diversifying are you doing, right? Or do you just really do a good job making some good concentrated bets on a couple operators, a couple businesses? You're going to run out of steam if you're trying to do, like you said, background checks on all these new people, whatnot. What's the risk reward that you're looking for here, and what's kind of the downside protection of what you're going for? So I'd lean, I guess, more towards, try to get a couple of them right versus all of these. That answer is not going to cover every single situation, but I wouldn't be too quick to rush to judgment if you have the ability to look into people a little bit more. Again, that track record is really important. But deals go south all the time for a whole host of reasons. And, fraud's one, but, businesses sometimes just don't work. So you're never going to be 100% right or it would be easy. Is
it acceptable for someone to ask for say it's a business or whatever it is? Is it acceptable to ask for last 2 years tax returns, a copy of those or something like that? Or would that be not really a thing that's done?
We would get into that more if we're doing for example, we're working with some institutional investors now. They're going to do a higher level of diligence into things like tax returns and whatnot. What we've seen with our investors, in Green Coffee Company, for example, is, they're not giving us 80% of their net worth. I think this business is interesting. I've been watching you guys for a while. I've heard good things from other people. Let me put a little bit into this and see what happens. So, a lot of people too are not going to go to that time and extent. They'll put something in there that if they lose it, they're okay with it. Obviously, we wouldn't be, but it's this is a little bit contradictory to what I said in terms of the concentrated bets. But, if you're going to make big bets, do your homework. If you're going to play around a little bit and try out some different investments or test people a little bit with small bets, I think you can have a little bit of a gut intuition of, all right, am I going to go with this and see what happens? There's that too.
Got it.
So listen, Adam, I got a fun little question for you, I think, because at the beginning of the conversation, we talked about, you guys do the coffee and things like that, and it's a commodity and it's inflation and things like that. So it's a good hedge for you. That's a kind of a safer, I guess, right? But there's a lot of coffees out there. I'm curious, of all the different commodities and things that you can invest in. Why coffee? Like you specifically, why'd you go for coffee? You just like coffee in the morning, or what we got here?
I do like coffee. It was really that investor demand that I mentioned at the beginning of people like Colombia. They want to invest more money in Colombia. They don't want to be too heavy in commercial real estate in Colombia. So what's similar and can kind of meet that demand? And what do people like understand, right? So we were looking at, for example, cacao in Colombia, which is another big ag product here. So basically chocolate, right? But people have grown up with this mindset around Colombian coffee, and they've heard that messaging for years, again, through messaging from Juan Valdez and seeing, 100% premium Colombian. It's just very simple for people to wrap their head around. And we saw a lot of opportunity in the industry itself. So if you come to Colombia, there's about 500,000 farming families in the country. Your average farmer owns 5 acres or less, mostly one or two. So it's a very fragmented industry that was kind of in the need of some consolidation. And we also see a lot of changeover in generations and passing farms down from one generation to the next. And then you reach basically a generation where they don't want to be farmers. The family money is tied up in coffee farms, so they're looking for an offload. Basically, we saw an opportunity to do a consolidation play here in Colombia in the coffee space. The other differentiator, again, from the cacao chocolate was coffee tree only takes 2 years to grow, whereas when you're talking about cacao, it takes 7 years. So it's easier for investors to see progress over the course of 2 years versus believe in 6-7 year time horizon where they're still seeing the coffee trees grow up before they're even producing. So it was just, I'd say call it product market fit or finding something that appeals to that audience, but go with the national product of the country, go with a product that the US consumer / investor is used to hearing about and understands pretty well or can wrap their head around. And, we found something that also had a lot of opportunity, untapped potential built into it, which is kind of what the business model has been designed to exploit.
So listen, I've never been to Colombia. Can you walk down in Colombia and not see a coffee farm? Is it like very...
Yeah. Basically the coffee here grows in... so if you look at Colombia on the map, you're going to have the Andes Mountains that kind of cuts up through the middle of the country in like a diagonal fashion, right? So those 3 kind of spines of the Andes Mountains is where the coffee grows. So your coffee is going to be growing on the sides of mountains. So when we buy coffee farms, we're really buying like the sides of mountains or whole mountains. For example, right now we have about 10,900 acres of farms in our operation. This year we'll do about 20 million pounds of coffee, but it grows in these various regions on the sides of the mountains. It has to be at the right altitude for it to grow. So yeah, you come here and see lots of different things besides just coffee.
You'll have to forgive him, man. He's Polish, bro. Like you got to forgive him.
All right.
Nice.
We got mountains in Poland, but I don't think you could, do coffee on those mountains, They
just roll down the hills in Poland.
Yeah.
I'm half Polish too, so I take offense.
See, there we go. Where you go, Jason? We should have said that at the beginning of the podcast, man.
Hey. I'm the one with the Polish last name here. Like, so,
You're just Polish wannabe.
Yeah. Well, hey, dude, like, I really appreciate the time chatting with us. If someone wants to learn more about you, the company, if they have maybe, and if you're open for this, if they have questions about like due diligence or like how would someone get in touch with you?
Sure. I think that the easiest way, I'm most active on LinkedIn. So if people want to send me a note there, that'll be the easiest way to find me. So just look for my name on the platform.
Got it. Well, I appreciate it, man, because this is an area that certainly like I feel relatively uneducated about, especially when it comes to this level of investing. So I really appreciate you opening our eyes to this opportunity.
Sure. Thank you guys for having me.
Man, cool episode. I'll tell you, like, I don't know a lot about, this kind of investment. And so that's why, I hope he wasn't getting annoyed. I'm asking all these questions like, what if this, what if that? And like, because, And listen, I get his point about like, hey, the more money you invest, you kind of got to do more due diligence. I kind of like the idea of doing due diligence for any amount of money, but also like, especially when you're an investor, you got to keep your money moving. Otherwise, you're kind of your yields move down over time, like the longer it sits dormant. And so you got to kind of do due diligence. And like, I'm not a fan of moving, tiny amounts of money because it just takes more work. However, I also want to build trust. Like you brought up this concept of trust, right? And so you got to build trust with somebody. Back in the day when I took on lending, like I remember my first investor was my mom. Actually, my mom was my first investor, but then I attracted my buddy's parent, his dad. He started off.
So you were borrowing money.
I was borrowing the money when I first started investing. Yeah. And his dad started off with like 20, 25 grand, it wasn't a lot of money. And the next day it went well. He got paid back. He was happy. We communicated well. Then he lent me more money. And then more, you know what I mean? Like, and then by the way, then he had his sister, my buddy's aunt involved as well. She lent me money too. And so like, you got to build trust. And, one thing I am partial to real estate, and, he mentioned real estate as being part of their play, is because there's a tangible asset. And I feel like there's a degree of security in there, that, a regular straight up business doesn't always have. Maybe you have inventory, maybe you have, equipment, stuff like that, but like many times you don't. And so like, that's why like, dude, for me, due diligence, man, like that's such an important topic and concept.
Yeah, you could probably do a whole another podcast on just due diligence, like, what you look for and all that kind of stuff, because there are so many things. But one of the biggest takeaways that I've gotten for someone hopefully listening to this podcast and they're looking to find money, right, is think about it this way. Like everybody starts somewhere. Like you just mentioned, you start with nothing. Everybody pretty much at some point, I think they start from zero. You know what I mean?
Yeah.
Whether it's that first relationship or it's the first conversation or whatever it might be. So just going out there, he mentioned at one point it's a numbers game, right? So in order for the numbers game to work, you got to talk to a lot of people. We got to go and step out there and go and have those kinds of conversations and just talk to people, right? Communicate. Communication was another big thing that he brought up, whether it's at the beginning, during, after, throughout the whole entire process. And when you start to look from that perspective, you start to get the wheels going. Like you said too, like in your example, you start with your mom and then somebody else and somebody else knew somebody else. So I think ultimately the ball starts to roll, but it's the hardest thing to do is at the beginning, just get the ball rolling, get the first dollar kind of a thing. You know what I mean?
Well, and that's where I think it's important. Like, I asked him this question directly. I said, like, what if you don't have a track record yet? And I think if I were an investor looking to raise money, number one, they're investing in you. And so you have to be the kind of person that someone's going to want to do business with. But also like if you have a pro forma or you're doing projections and you're trying to forecast what you're going to make, be realistic. I would present multiple cases. I'd like, hey, here's my anticipated, like, this would be awesome. Here's the likely situation. And here's if things go really south. This is probably our bottom of what, maybe you'd lose 50% of your money or whatever it is, right? We'd sell it if we'd fire sale it or whatever. And I think presenting those really transparently is way better than trying to like get somebody excited and play to their emotions that this is gonna be a home run and then have someone be disappointed. So I'm just so, dude, I just feel like you just have to be so transparent, so trustworthy. And you have to really do things the right way. And because, that snowball that works when things are going well can also count against you. If you have a deal go south, word gets around. I just did a deal. It didn't go south. The numbers were okay. The return was okay, but I was not happy with the communication. And the individual who borrowed the money, I felt like I had to chase them down to get reports. And I'm a fairly hands-off kind of investor, but at least give me a quarterly update as to like, what the numbers look like, why they look like that, what's the plans to address it, how are we moving forward. And I think that's an important component to this as well. He mentioned communication a couple times.
Yeah. The other thing they mentioned I got to take away is I think is important for people who are looking to borrow money, right, for their deals, is to believe in yourself, believe in that project. Because think about it, if you don't believe in that, how is someone else going to give you the money? And they can tell, you know what I mean? So I think that is such a huge, important part into finding, within yourself, whether it's like, this is your first deal, believing in yourself, or borrowing that faith from, the groups like we heard in Life on there, right? That we talked about. But I think that belief is a huge part into this whole entire process.
Yeah, totally, dude. And if you're on the side of lending money, so the belief is like if you're the one, receiving and looking to raise money, if you're trying to invest money, I really I'm probably that annoying investor who wants to know a whole lot more than everybody else, because all it takes, man, you have one deal go south, and let's say it's $100,000, you lose $100,000. That's going to take you a lot of time to build back, and that's valuable time, right? And you lose out on compounding interest and all kinds of things. And so, do your due diligence. And by the way, please do not take this episode as any kind of endorsement for you to invest in the Green Coffee Company at all. Adam was on the show purely to serve as an illustration of kind of like what it can be like and some of the questions to ask and due diligence, but this is no endorsement at all. I don't know Adam at all, but I thought he had some value to add in terms of his experience, especially as an attorney, in some of the things to pay attention to and look out for when you're an investor or you're looking to invest some money on either side of that coin.
See how it goes back to due diligence?
Due diligence, brother.
Yep. You talk about being an annoying investor that you are. I think sometimes it's a good thing. And by the way, you're not an annoying investor. You're just annoying. So,
well, and I was going to say I should have done more due diligence on my friends before certain friends I should have said before.
Hey, you know what? That's just how it is. You're stuck. There's no way going around it. So, all right.
Yeah, right. Well, listen, hope you guys got something out of the episode. Hope you enjoyed it. Hope you found a valuable nugget that you can use in your own business. Maybe you're trying to attract money, or maybe you are looking to invest money. Maybe you got a tip that you can kind of take into consideration as you move forward. In either case, if you like the episode, give us a thumbs up or a review. We would love for you to share this. Tell somebody about it. This is how we can kind of influence and impact the entire entrepreneur and business owner community. And, usually the Life in Our Show is a lot about making more and working less. Well, investments are one of the ways you can make more money, but you got to be careful because you can get burned. I have seen deals gone south, like I mentioned in the episode. So always do your due diligence, be careful, have fun, and we will see you next week. Everyone, take care.